Welcome to this financial educational video where we will be discussing two important concepts in investing: value stocks and growth stocks. Whether you are a seasoned investor or just getting started, understanding the difference between these two types of stocks is crucial for making informed investment decisions. Defining value stocks and growth stocks. Let's start by defining what we mean by value stocks and growth stocks. Simply put, value stocks are stocks that are considered to be undervalued by the market, while growth stocks are stocks that are considered to have strong potential for carrying growth in the future. Characteristics of value stocks. So, what are some of the key characteristics of value stocks? Well, value stocks typically have a low price to earning PE ratio, which means that they are priced relatively cheaply compared to their earnings. They are also tend to have a high dividend yield, which means that they pay out a relatively high percentage of their earnings as dividend to shareholders. Finally, value stocks tend to have stable earnings and a history of consistent performance. Characteristics of growth stocks. Now, let's turn our attention to growth stocks. Growth stocks, as we mentioned earlier, are stocks that have strong potential for earning growth in the future. They tend to have a high PE ratio, which means that they are priced relatively expensively compared to their earnings. They also typically have a low dividend yield as they tend to reinvest their earnings into the business to fuel growth. Finally, growth stocks tend to have a history of high earning growth and a focus on innovation and expansion. Historical performance of value stocks versus growth stocks. So, how do value stocks and growth stock perform compared to each other? Well, historically, value stocks have tend to outperform growth stocks over the long term. This is because value stocks are typically less volatile and have a more stable earning history, making them less susceptible to market fluctuation. However, growth stocks can provide higher returns in the short term as they are more focused on growth than expansion. Examples of value stocks and growth stocks. Let's take a look at some examples of companies that are considered to be value stocks and growth stocks. An example of a value stock: SBI is the largest public sector bank in India and is considered to be a value stock due to its low PE ratio and high dividend yield. The bank has a long history of stable earnings and is known for its conservative approach to lending. An example of a growth stock is Bajaj Finance Limited is a non-banking finance company that is considered to be a growth stock due to its high PE ratio and focus on innovation and expansion. The company is known for its innovative financial products and has a history of high earnings growth. Incorporating value stocks and growth stocks into your portfolio. So, how can you incorporate value stocks and growth stocks into your investment portfolio? Well, it's important to have a balanced approach that takes into account your investment goals, risk tolerance, and time horizon. One strategy is to invest in a diversified portfolio that includes both value and growth stocks. Conclusion. To sum up, value stocks and growth stocks are two important concepts in investing that every investor should be familiar with. By understanding the difference between these two types of stocks, you can make more informed investment decisions and build a well diversified portfolio that aligns with your investment goals. Thank you for watching our video on value stocks and growth stocks in the Indian stock market. We hope you found this educational and informative. Don't forget to like and subscribe to our channel for more financial education content.